What's up? Let's have a real quick case study session on um, this week's what is it? It's Tuesday's price action because we have had real low probability conditions, but some days the price has still been able to give me some setups. So now the low probability conditions have meant for me that it has been hard for me to identify these setups live time, but I feel that for me, and also if there are unprofitable traders that are still studying this thing, these things that I'm going to show you are going to be beneficial. So I would recommend you watch this thing through. So this here is Tuesday market open 9:30. So this doesn't look so low probability as a condition, this movement that we saw here, and it's not necessarily exactly that, but this was a day that was difficult for me because I couldn't identify the setup, because sometimes you're going to have just low probability conditions like this, and sometimes you're going to have like days that trend too heavy for you to be able to get into this like trade, exactly something like this. It could just start up trending and you cannot just get the trade there, even though you know the direction. If like you might even know that market is willing to go higher, but there's just no way for you to enter into this price action here. Like maybe from like a small pullback, but like not many people feel comfortable with putting their stop loss somewhere in this range where you know that the price could still easily pull down before running. So something like this usually means that I'm not able to enter to the markets. So let's see what the Tuesday gave me. Um, so obviously we saw price breaking higher here above the high, after which we swept a lot of sell side. And this sell side was swept after the markets opened in Tuesday. So it's sell side there. This week got respected, and we basically didn't liquidate that low. So that's basically relative equal lows there, and we are just leaving them right now. Not willing to go towards them. But yeah. So market open with trade lower. And after you sweep a lot of liquidity like this, and we are overall inside of like a consolidation range that is leaving these like high, lower high, we are leaving liquidity for us to run that after sell side swept. So this is totally reasonable to expect longs in this region, especially when you see also this as your volume imbalance. Let me just take that. So this is a volume imbalance, very good, very nicely respected. So here we actually got a nice trade, and so the higher time frame bias was that after we induce these lows, there is a higher likelihood of chance that we run above this high and this high. So then I was kind of concentrating on getting in the longs, but I should have been able to see that fact that we still need to get there because there is a lot of liquidity down here. There is 1, 2, 3 times relative equal lows in my opinion here, and after price displaces through this low, gives this fair value gap, we are now, and we also swept this high, we are now having a lot of confluence to run these lows, especially if this fair value gap holds, which it ended up holding. You can see that. So what I was able to unable to identify is the fact that I could have easily got into shorts in this area, but um, I just didn't do it, and I kind of just missed it. And yeah, so let me show you the day's action in 1 minute. So this is the 30-minute gap. We trade into it, and from here in this gap we want to start seeing displacement lower. Okay, I don't want to execute in 9:30 because 9:30 market can give you surprising moves to some certain directions. The initial move happens higher 9:30, which is due to swing above these highs here, and then we mitigate these fair value gaps. And then the next candle immediately displaces lower, and this is a break of structure to the downside. When the bias was anyway to drop lower, this could have been absolutely beautiful trade to execute from this fair value gap to go short. Either have like a conservative stop above this high, or maybe even this high, or then like around the middle ground there. And you could have just targeted this low and this low. Then what you would have done is break even and maybe like 50% off at that low. Would have been absolutely beautiful trade there. That's simple and beautiful. That was too close to the market open. I just wasn't ready for the setup, and I hadn't really framed the idea in my head. I was kind of thinking more about the longs, and then I saw this only after everything had happened. So what can you do? But in the future I will be more cautious about this stuff, and even high time frame 3 minutes you can see we flipped this gap, which is massive. Great BPR here, 3 minute fair value gap. Have your stop around here. Let's just put it conservative above the high, and this would have been absolutely beautiful. No problem here whatsoever. Let's see how 5 minutes would have looked like. Yeah, 5 minutes doesn't really give you a nice fair value gap to enter from. But yeah, 3 minutes, pretty nice. And if you missed the first trade, maybe you could have got into something still. So here we kind of start chopping down. Now if you would have wanted to enter into something here still, I don't know, your next opportunity would have been like this fair value gap. Now if I entered there, I wouldn't be too comfortable putting my stop above that high, so I would be having my stop most likely above that high, and then just target the same target, or simply wait for an confirmation out of this area. So you don't have to execute the trade exactly there. You can wait for a bearish candle to print as well. Which could have been like okay, the risk to reward would be a little bit worse here, but you wait to see a bearish engulfing candle from this fair value gap, which would have been here, and you could have executed even from there. Like, just put your stop loss at the CE of the wick, target that low, and you are still going to be able to get around 2R to your extreme target there. So even something like this isn't that bad, and we could even reduce the stop loss more, I believe. So I mean, not much, but just above this candle bodies there. Could be fine. So you can see then, how about here? I can't actually remember properly why I didn't execute long here. I believe the reason was that we have seen massive displacement lower. I didn't really know if market is going to disrespect or respect this fair value gap, and then I just didn't want to do it anymore. I would have wanted to see like a price continuing to trade lower from here, then the market would have been here, around here in 9:30, and then we would have like wicked lower in judo swing and then started to run at the start of the day. But the move higher happened kind of later, and my ability to like execute that trade long, which could have happened here, that long would have been viable and good idea, but didn't really work for me today. But this is beautiful case study, and I would hope that in future I will be able to execute this setup here.